the Moneyweb Crypto Podcast, where we discuss all things crypto related. Your host, Kieran Ryan.
Is this the future of investing? Fresh off the listing of the Titans portfolio on the JSE comes another bit of interesting news. You can now buy the same portfolio on digital exchange MeshTrade at a 0.2% cost. There's a 1.6% management fee that goes on top of that. Trades are logged on the blockchain, and that comes with some impressive benefits. The ability for really small investors to get involved and buy fractions of a share or an asset. MeshTrade will take trades as low as R1 if you want that. This has always been the promise of blockchain investment. Titans, managed by Anbro Capital Investment, allows investors to gain exposure to the best performing stocks in 11 sectors making up the S&P 500. Over 3 years, Titans delivered annualized returns of 20.5% against the S&P 500's 13.1%. So that's pretty impressive. Active managed fund. Connie Bloom, CEO of MeshTrade, joins us now. Welcome back, Connie. It's good to talk to you again. So is this, in fact, the future of investing, being able to acquire good quality assets on a digital exchange?
Yes, it is. Kieran, in some of our previous conversations, we mentioned what we're building, and in Mesh, our entire purpose is to create a capital markets that's easy to access, simple to use, and transparent. And we're doing that. So by this new listing, what is now available on Mesh is a full model portfolio for our retail clients to invest in. And never before has it been available on a blockchain-based application like ours for our clients to be able to invest in a Bitcoin alongside one of these very well-balanced equity portfolios like the Titans is. So I would say that it is the future of investing available today.
All right, so let's just talk about the costs. I did say it's 0.2%. That's your charge. Then there's a management fee of 1.6% that goes on top of that goes to the management company. Is this, in fact, cheaper than going through a traditional broker or an online broker such as Easy Equities?
It is a lot cheaper going through your traditional route. So the 1.6% management fee is a fee that is charged by the fund manager, who's Anbro in this case. And that is not deducted from your trade amount, but it's deducted from the performance of that portfolio and the underlying. That's quite standard. That's how you would see it in the traditional world as well. But the 0.2% trading fee is a lot cheaper than the most of the traditional brokerages. It's because everything in our world is actually contained within that 0.2% fee. So our clients aren't hit with hidden costs such as an insurance cost, a brokerage cost, a pricing and portfolio, and a custody cost. Everything is included in the 0.2%. So what generally happens with an investment like this is you need to be so careful of some of these hidden costs eroding that very hard-earned increases or yields that you see on the portfolio over the full kind of life cycle of it. But with Mesh, it's very transparent, and we can do this because of the technology that we are based on.
All right. Now, why did you go with the Titans portfolio rather than something else?
We decided to list the Titans portfolio, firstly because of the absolute quality and good work that the Anbro fund managers are doing. So we know Justin Brophy and Craig Anthony quite well, that is managing this company and this fund specifically. But other than having incredible humans looking after this fund, they also have a very unique approach to how they construct the fund and also take care of it. And this is the thing that drew Mesh specifically to this portfolio originally, is that they don't just go for an S&P 500 tracker. It's an actively managed fund. So what that means is they don't just look at what is happening in the benchmark. They actually do their research around the companies that they are investing into and the mandate that they are following. And as you mentioned in your introduction, they go and they invest across the S&P 500. So this asset is actually truly diversified in that when they look at the 11 sectors of the S&P 500, generally the S&P 500 trackers are very heavily weighted to the Magnificent Seven or the big tech companies. So when anything happens in the tech world, your portfolio swings just as greatly. But because this one is now diversified across the 11 sectors, you also get exposure to companies that you wouldn't generally get exposure to. So like Costco and Johnson & Johnson's. So when the tech companies go up, you get the benefit of the tech companies go up. But in a time that, like right now, where we have a lot of socioeconomic uncertainty, a lot of war, a lot of like political uncertainty going on in the market, you are either buffered from that really bad downside, or you get the benefit of other economies or other part of the economies also actually growing in that time. So you would like that little bit more of diversification. And that is the reason why we said that this is a core portfolio for our clients. And what we mean by that is that core equity part of your portfolio that you invest into. So if you come and you only invest into this asset, your portfolio would be doing really, really well.
All right, let's get into the weeds a little bit. A lot of people will still be skeptical when they hear the word blockchain and crypto, and you're not really appealing to the hardcore crypto base, are you? For example, you come from a traditional finance background, so maybe explain the difference here.
Of course. So I think we've seen a lot in the market that there has been a lot of naysayers against cryptocurrencies in general, crypto technology, without actually looking at the fundamentals thereof. But this has changed now in the market. We've seen a really big influx of bigger companies now trusting this technology and also building their businesses on it. There's a reason why BlackRock in the US is investing so heavily into having their own technology in their own space within this market as well. We see JP Morgan doing a lot of transactions on this technology as well, and even the South African banks starting to shift. So the negative sentiment is no longer associated with it. From our view, we may look like traditional financial markets people, but we've always understood the financial markets incredibly deep, but we also love the technology and we've always been heavily invested into that. And we knew that in Mesh, part of our secret sauce is that we understand how the financial markets work and we understand how the capital markets work. And we can bring that benefit to our client base in a lot more sophisticated and elegant platform, such as Mesh, that is simple to use, easy to access, and transparent.
All right, I asked you this before on a previous conversation. Is MeshTrade eventually going to be a competitor to the Johannesburg Stock Exchange? I mean, you've already done some pretty impressive fundraisers and bond issues. Maybe just talk about that. And where is the financial investment world going? Is it in the direction of digital, or is it the traditional stock exchange route?
I think there's no secret that globally there are less and less listings happening. So the amount of companies that are listed and the amount of assets that are listed are declining globally. So a little known statistic is that the US equity market has actually decreased by 43% in size since 1995 until date. And this is not just something that is restricted to the US, as I said, it's a global phenomenon that's happening. So what we're seeing here is a shift towards what we call the private capital markets, and that is where Mesh finds its home. So this is the market where you would generally hear your friends and family talk about venture capital and private equity, and your high net worth individuals and your family offices invest there. So generally, if the people with a lot of capital are investing into a space, you should maybe take note to sit up and understand why that is happening. The biggest driver of that is that in the formalized exchanges, the cost of compliance is incredibly high, and there's a lot of barriers to entry into that market. So only the biggest companies really go and list. The other trend is that companies are listing later and later. So the average age of a company now IPOing, listing their stock on an exchange, is now 11 years old, where previously it was 4 years old. So what this means is a company is no longer growing in the public market. They're growing in private, and they're listing so that the entrepreneurs can take money off the table or get some capital out of the businesses. So if you're only investing in the public market, you're missing out on 90% of the growth that's happening in the market. And this is where the future of the investing market is going, and also where Mesh finds its home. We serve the private market, so we don't compete with the JSE. They have their space. They should keep on taking care of the IPOs. But Mesh takes care of the private markets where people want to raise capital within the private sector or invest in alternative assets that they cannot find anywhere else. We're seeing more and more investors and more sophisticated investors stepping into this space and increasing their portfolio sizes to private equity, private debt, commodities to a large extent as well. And we're just foreseeing that this trend is going to keep on taking place. It also runs in parallel with the trend of the tokenization. So more and more assets are being tokenized, and it's mostly the private market assets that are being tokenized and are trading in this efficient manner.
Yeah, that, of course, was one of the promises of blockchain, is that you could fractionalize assets. So you could buy a tiny bit of an Apple share, or you could buy a 1,000% of a Microsoft share. But tell us a little bit about the market that you're appealing to. So you've done a 100 million rand bond raise a little while ago. We've spoken about that before, but maybe just remind us on that and how that's doing. And are you trying to open up capital markets to smaller companies who would be looking to raise capital? And I guess you would have some criteria that you got to look at there. You know, you're not going to bet on a spaza shop. You want something that's maybe got some annual recurring revenue that's fairly predictable and it's got a pipeline into the future.
Absolutely. So as a business, we need to make sure that we also grow and we service a very definite part of the market. And as we just discussed, we mentioned the private market. So we are looking for those fantastic and interesting entrepreneurs within the capital market space that is not yet serviced by the bigger banks and the exchanges. So we're looking for companies that are generally falling within the commercial space and definitely within their growth phase. It is our objective to keep on reducing that investment size to open up the market and reduce those barriers to entry to make it more effective for everyone to raise capital. But at the end of the day, a market always decides what they invest in, whether it's a trustworthy company, whether it has the right controls and governance in place, and whether the price is also right for them investing into. So you can never get away from those good quality principles of having a fantastic company. So we're looking at keeping on servicing that growing part of the industry because South Africa has a lot of those fantastic entrepreneurs waiting to get access to the market. And to your point of how is that 100 million rand bond raise going, what is happening a year down the line, and it has been a year, I can say it's been going fantastic. So just to remind your listeners, this was a company that approached me by the name of the Morse, and they build school networks within South Africa to provide education in mother tongue. And they raised 100 million to expand the network of schools to be able to give more kids the opportunity to have an education in their mother language. Now, we successfully put that 100 million rand bond out into the market and raised the 100 million in full for this business to be able to expand. Now, they have gone and they've done some incredible work with that money. They've made a lot of investments and bought the listed schools from a beautiful kindergarten through to a middle school as well. They've successfully paid 4 coupons, and they will keep on successfully paying those coupons as they go forth. And it's just fantastic to see all the learners being able to go to school. But now something interesting also happened on that asset, because when we pushed it out to market, it was very important for the Morse to include their community base as well. So the people that send their kids to school, the grandparents that also pay for their grandkids to be able to go to school, they say to us that they really want their community to also be able to invest in that asset. And so we dropped that minimum investment amount from a general 1 million that you see in the market to a 5,000 Rand minimum investment. And we had a 17% retail inclusion in that bond, which has never been done before in the market. So firstly, it was the first corporate bond being issued on a tokenized format, but also having that retail component as well has never been before been done. And generally in these kind of assets and this kind of bonds, you don't really see a secondary market on it. It's very illiquid. People just hold it to maturity. But because of this retail inclusion, there is an incredible secondary market taking place. And we have seen over this last year that we've been averaging between 8 to 10% secondary market volume, which only usually on average on these assets, you see 4% over the full 10-year life cycle of this asset. So it makes for incredible investment. Currently, the money market, I would say that this asset is providing some of the best yields at the best risk factors as well. So it keeps on being a lovely asset to invest in.
And what is the yield on that?
It's still standing at prime plus 2%.
Prime plus 2. And 17% of that went to retail investors, and I guess the rest went to institutions.
Yes, institutions and companies as well.
Right. So going back to this question about, is this the future of investment? What is the competitive field? You know, Mesh Trade, is it a South African company? Is it an international company? Who are you competing against? And we've also heard recently, in fact, we're in the Moneyweb Crypto podcast, we were speaking quite recently with Frank Leonetti from Afridax about the entry of banks into the space. It's an interesting development. Not going to be welcomed by everybody, but I think it is going to be a huge step in the mass adoption of cryptos. You'll be able to buy Bitcoin and other tokens and coins on your app. However, the banks have been hostile towards this particular space for a while. Tell me how you see the future going.
Yeah, having more and more players entering into this market is always welcome, because the more people we can get to adopt this technology in this space, the better it is for the industry in general. And Mesh is a South African company, but we are also an international company. Our HQ is in the Netherlands. So Mesh is going to keep on expanding our global footprint. And what advantages that is providing to our investors and our clients within the South African market is that as we expand, we offer more investors in South Africa the opportunity to also invest into international assets, and also international investors to invest into South African companies and issuers as well, which is a massive advantage that we can offer. And welcoming the banks into this space would provide our clients and our investors firstly the opportunity to maybe also get a bank to invest in their assets, or us being able to distribute some of the bank assets to larger network of clients. And you mentioned that they may have been hostile for a while. I would rather say that they have been cautious rather than hostile outrightly. I think a recent SARB finding, or the recent court case in which exchange control specifically came up, showcases that in the form of Standard Bank, they're actually taking notice of this space and making a stance for it as well, for something that they think that they can put their brand and their clients behind to see the benefit of it. I foresee that we most probably will see more and more of these kind of actions taking place. So welcome to them, to this space. And I think we should be encouraging it more and more.
Yeah, when I say hostile, I mean in the sense that they debanked a lot of the crypto companies. I think there's only one bank, and that is Standard Bank, that is acting as the bank of last resort for the crypto companies in South Africa. But I do suspect that's going to change quite fast now, even before the end of this year. Yeah, I can see that would be a positive development for the country and for the crypto market. But here we are. It's a groundbreaking move that you're offering to the retail market an entry point for some really, really, truly well-managed funds with great returns that give you pretty good protection against inflation, South African inflation and currency depreciation. And I guess this is the start of probably you in due course, you're going to have a lot of these type of investments listed, correct?
Absolutely. In Mesh, we're always expanding, we're always growing. We're always looking at partnering with more and more people to bring interesting assets to market. Most specifically, we have a couple of property transactions coming up, which I think that both institutional and retail clients will be able to invest in and participate in. And then thereafter, we'll be looking at bringing more and more private credit, most probably to the market as well, either in the form of funds or direct exposure, which I think has been sorely missing from the retail segments in South Africa for a very long time.
Connie Bloom, CEO of Mesh Trade, thanks very much for that, and look forward to speaking to you again in the future.
Thanks for listening to the Moneyweb Crypto Podcast, hosted by Kieran Ryan. To listen to our other podcasts, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.